who has 100% of the information, who is no stranger to the U.S. Army Major retired, financial advisor, coach and mentor of the Be Your Own Bank movement. We call her the Trade Whisperer. She's the creator of Women Teach Forex and the Be Your Own Bank BYOB cash out strategy. With that being said, ladies and gentlemen, I bring to you Ms. Tasha M. Dyer. Ms. Dyer, are you on the call?
Yes, I am. And thank you so very much for hosting this call this evening. And ladies and gentlemen, I just want to give it back to Mr. Love Phillips because he is doing a phenomenal job and he is an amazing individual in this movement and the things that he is actually doing. So once again, thank you so very much. Now, ladies and gentlemen, where we are right now tonight is training. And what we introduced to you all last week was how you can begin to take the cash out, how you can take the BYOB cash out and use it on other time frames. How you can scalp it is specifically last Tuesday we talked about how you can scalp it on a 5-minute time frame. And I want to capitalize on that tonight. I want to help you understand time frames. I want to help you understand the market. And I want to help you understand the why behind the what. Because the goal is when you enroll, we want to put you in a position of profit. You want to learn the tools and you want to completely understand the strategy. So just to recap and just to help everyone on the call understand, what exactly is the BYOB cash out? So for the average person who knows absolutely nothing about trading, you've enrolled and you are putting yourself in a position to win. You know absolutely nothing. And I'm ready to win. Let me tell you exactly what the web analyzer is, why it's so important, and why this is such a critical tool to have. So the web analyzer, what we know, we ride the wave of the market, and understanding that the market speaks to you, the market talks to you. And what you really want to understand is that the market communicates with you. And so just like in conversation with the individual, just like in conversation when you're talking to someone, you want to listen. You don't want to listen for what you want to hear. You know, you want to listen for what it's saying, because that's how you have a more effective conversation. So with the market, you know, think about it. How you do one thing is how you do everything. So with the market, what I'm looking for is I want to listen to what the market is telling me. The market is telling me what it's going to do. The market is telling me how it's going to react. The market is telling me the direction that it's going. And for me to have a successful trade, for me to be in profit, it's all about that precise entry point. It's all about that precise entry point and that precise exit point. So I want to make sure that I end in profit. And how exactly do I do that? How do I end in profit? So you have to listen to exactly what the market is telling you. So that's what we want to do. We want to hear the market. We want to listen to the market. So this is how we do it. So now, the cash out, BYOB cash out. Understand. Now, the first thing first. Now, the market gets scanned. We scan the market. And when we scan the market, see, the web analyzer does heavy lifting for you. The heavy lifting that's done for you is we're looking for what's called an entry trigger. Now, that entry trigger is these call prices. Now, you can, when you're analyzing the charts, you're looking for that entry trigger. Well, the web analyzer is giving you that entry trigger, and that's exactly what you're looking for. So now understand that when the market, so the first thing we're looking for, that first indicator, that first rule is that stochastic. And when that stochastic is at the bottom, that means that it's measuring momentum, and when it gets to the bottom, it has to rise. And when it's at the top, it has to fall. So now we're measuring the momentum of the market. Now, once we determine what we're looking for, understand that stochastic determines what I'm looking for, okay? Now, once that's determined, I turn around and now I'm looking for my Hikanashi candle and my PSR to match what I'm looking for. So I have my stochastic. So for example, if this is where it would have been called, my stochastic crosses over and is headed in an upward trend. Now, I'm now looking for a green Hikanashi. Green means buy, red means sell. So I'm now looking for a green Hikanashi candle and with a flat bottom, because these are indicators. So understand, this has to be done on here. It has to be done on a web analyzer. You're not going to be able to do this on your phone, because these are not Japanese candles. These are indicators. And these indicator candles, Hikanashi candles, are loaded into the site. They're loaded. So now when they line up and that PSAR has flipped, it is now rising. You know, it's rising. So I can grab my 10 pips and cash out. So, and for a sale, it does the exact same thing in the opposite direction. So the blue crosses over the red. It starts at around that 80 mark. It starts around that 80 because it's capturing the momentum down. I'm looking for that red candle, and that red candle is now in a downward trend. That PSAR flips to the top, and now it's down in a downward trend. Now, why is it that's the rules? But why is it that when I enter the trade, that I get the pullback? I get my trade immediately goes into the negative and then it goes positive. Why is it that I can grab 10 pips and sometimes it looks like it goes 20 or 30 pips? Or what is it looking for? So tonight, what we're gonna talk about is helping you to understand those time frames, helping you to understand when you can grab more pips, helping you to understand what it is and when you want to trade on that 5-minute chart, because you want to always trade with the trend when you're scalping. See, the 15-minute, when you're introducing this concept to someone who does not know anything about trading, you want to familiarize yourself, and you want to stay on that 15-minute chart, because that gives us the flexibility. It actually gives you the room. It gives you that maneuver time frame to where you can navigate. It gives the chart the ability to move through that pullback. See, the market corrects itself all the time, and it gives you that time to do that. It gives you the opportunity for that correction. So before I go any further, do I have any questions on exactly what the BYOB cash out is before I begin building on top of that? Any questions or comments on the BYOB cash out? Any questions or comments? Because this is when you're just doing straight basic BYOB cash out, you want to be on that 15-minute chart. And that's where we've been, on the 15-minute chart. And you'll understand why after the night. Questions, comments? Okay. So now I'm going to jump up to the hour. Okay. Now, when you're looking at, is this going to be a good one to look at? When you're looking at the market, okay, understand, and this is very important, okay, you want to understand that the market, even though what you see is the market is in a downward motion, right? It's in a downward motion. But what is the market doing? The market at this point is correcting itself. So I'm in a downward motion, the market corrects itself. I'm in a downward motion, the market corrects itself. I'm in a downward motion. It corrects itself, and I'm in a downward motion. Now, what does that mean to you? How do you trade that? Where does this make sense to you? So these time frames all speak to each other, and they all play a part with each other. And you wanna understand that. You really wanna understand how all that plays together. But the biggest thing for you to take away from this is that when you see that correction, it corrects, and you can actually look on a smaller time frame, and you'll see that the market is doing something different. So when you're analyzing the charts, you never want to analyze a chart on a lower time frame. Okay, you never want to determine the trend or what the market's doing on those lower time frames. You always want to make a decision on the trend of the market, what the market is doing from a minimum of the hour and above. Okay, so because we're looking at slower time frames, we're pretty much looking at the hour. What I'm using tonight is the hour time frame. So, and as you can see right here, we're on the hour chart. The market is in a downward trend, right? I'm in a downward trend. I have a correction, and then I'm back in a downward trend. Now, when I'm looking at this, okay, in the hour, on this hour chart, if I go down to the 30-minute, I'm also in a downward trend. But understand, it takes 2 30-minute candles to make up that hour. Now, it's gonna take 4 15-minute candles to make up that hour. So in this one candle, all of this activity is taking place. So you see that I'm still in that downward trend. So, and then how many does this take? I need 12 of these to make up this hour. And so what we're looking at, this just happens to be a strong downtrend because I didn't have any other pullback. I didn't have any, I had a slight correction right here, but I did not have anything else going on. And it's the same thing. So you got 60 of these. So what you're looking at and what you're seeing is, what you're looking at and what you're seeing is all this activity that's taking place in that hour chart, in this hour time frame. So what does that mean when I'm trading? If what you want to understand is the overall trend of the market when you're trading. So if I'm just starting to trade, and I want to get on and I want to do the BYOB cash out, you see, it didn't matter. It didn't matter. I'm doing 10 pips and I'm cashing out. Just 10 pips and cash out. It didn't matter that I understood the trends. It didn't matter. See, that comes with me studying. That's the importance of the university. That's the importance of me going into the market. That's the importance, me going into the academy. That's the importance of me making sure that I stay plugged in. That's where that comes in. Because I can follow 3 simple steps, 3 simple rules, and I can be in profit. That is why this works within those first 30 days. 10 pips and cash out. But because I understand what's going on now, because I want to take it to another dynamic, because I want to take it to another level, now you understand, because I can look at this hour time frame, and in over these last few hours, what I see is that I have a strong downtrend. I have a stronger downtrend. So when we're looking at a few trades and we're seeing these different trades, and you wonder, well, I could have got 30 or 20, 30 pips, right? I could have gotten 20 or 30 pips on that trade. Well, how do I know when I could have got 20 or 30 pips? How do I know that I could have gotten more pips? How do I know that? Well, because I know the trend. I know the direction the market, see, the market tells me what it's doing. The market is going to tell me what it's doing. The market is telling me that I'm in an overall downtrend right now. So if I'm in an overall downtrend, I'm gonna trade with the trend. See, I can trade a correction, and trading the correction, I'm only getting 10 pips. See, this was that correction. And that correction, you can get, that's why it works on the 15-minute chart. Because you can trade the correction, you can trade the trend, you can trade the correction. And you can get 10 pips either way. So you can grasp those pips. But just like we've discussed, when you see there are certain things and certain indicators that the market tells you that if it's going against that trend, you know to say, okay, if I check this hour and I see what's going on, or if it's so, do I trade against that trend? Do I want to trade against that trend if things are lining up? Because we've seen sometimes where I'm not going to grab 10 pips. I might only go for 5 pips or something. But we introduced the 5-minute. But before I even go there, I want to open it for questions or comments. I want to make sure that you all are following along with me. So any questions, any comments as of right now? Any questions, any comments?
Mr. Alpha Buckley. What you're saying is, if I want to get this right, is that are we looking, the 15-minute gives you a better perspective, 15-minute time frame gives you a much better perspective than a longer time frame, because you can actually see what's going on in a shorter frame of time than a longer frame of time. Is that correct?
You're saying it back. Okay. The hour gives you a better perspective of the overall trend of what the market is doing. So for example, what's happening right now at this very moment, this currency pair is in a downtrend. It has a strong downtrend. So if this market is in a strong downtrend, what I'm focused on and what I'm looking at is a downtrend. Now, we're trading the 15-minute. I'm trading the 15-minute because everybody's not a swing trader. Everybody's not waiting an hour to trade. Everybody's not a swing trader. So because I'm not a swing trader, I want to scalp. But, I'm a scalper, I'm an intraday trader, which means if I'm scalping, I want a few pips and I want to be in and out of the market. If I'm intraday, I want those 10 to 30 pips and I just want to get in and out, right? So, and that actually gives you that profit, where you can get in and get out. So scalping 5 pips here, there, scalping intraday, you just want to be in and out of the market. So when you're swing trading, that's when you're on those higher time frames. You're looking for long trades. So that's when you're actually trading on an hour, 4-hour, daily, weekly charts. But you still want to understand those higher time frames, because that is where we understand what the market is doing. The reason why we look at the stochastic on the 15-minute chart is because it measures the momentum. You've all heard me say before, if the stochastic starts somewhere in the middle, we don't know where we are in the market. We don't know what the market's doing at that moment. We have absolutely no idea. We don't know. And that's because here you can't see the big pressure. Big picture. You don't know. So to take it to the next level, so what I'm saying is, for the basic learning, before you just learning, you can literally just say 10 pips, follow the 3 rules on a 15-minute chart, grab my 10 pips, cash in and cash out. But I've had the questions. How do I get more pips? Can I get more than 10 pips? Or, what about this trade? This trade didn't end in profit, or why didn't this trade end in profit? And the question is, the market is talking to you. The market is telling you what it's doing. And so when you're ready to take it and you're ready to do more than just 10 pips in and out, based on the 15-minute chart, or even though I introduced the 5-minute scalp to you, because we get more 5-minute calls on the web analyzer than anything, you know, because those have more entry triggers. If I'm equip you with understanding that you can trade that 5-minute, I want to make sure you understand that you can trade that pullback. You can trade on that pullback. And so I want to make sure, but I want to make sure you're doing it in profit, because if you're trading on a 5-minute chart, you want to make sure you're doing it on a pullback. I mean, you don't want to trade a pullback. You wait for that pullback and you trade with the trend. So you have to make sure you understand the trend. And I see I got something in the chat too. So Tranisha. Oh, you say I answered your question. So what was your question, just for anybody else on the call that might actually have? What did I answer? Okay. So that is that. So now that I understand that this
Did you get your question answered, Mr. Buckley? Did you get your question answered?
Not really.
well, I can.
Let's see.
Okay, so the 1 hour tells you what the market is doing. That's the big picture. The 1 hour is the big picture. The 15-minute is where we're still, you can still go back and trade on the, you know, do the 10 pips and cash out. So this is where you still follow the rules, the 3 rules. You still follow the 3 rules on the 15-minute chart, but the 1 hour gives you the big picture of the trend of the market. We need that 1 hour chart to tell us 1 hour or higher to tell us what the trend of the market and what the market is actually doing, the direction the market is going.
So can we agree or disagree? Agree. Okay. So you're saying that the 1 hour basically tells you the trend and how things are going, whereas the 15-minute tells you exactly how many pips you could actually gather to make a trade. Did I get that right?
The 1 hour definitely tells you the trend and where it's going. That is correct.
Okay.
The 15-minute is just follow the rules and grab.
Right.
Correct.
Okay, gotcha. With your stochastic and your pips and your buy sell, and then where your where the stochastic graph is. So you're saying when you grab the pips, you're grabbing the pips because the stochastic at the high end, at the very tall end, before you start grabbing pips. Don't grab it at the bottom and when it's low. Is that right?
On the
No. Let me just jump in. Once again, the 15-minute chart is designed for you to gather at least 10 pips, whether it's at the top of the stochastic or the bottom. The top or the bottom only determines whether you're going to take a sell position or a buy position. So the stochastic and the 15-minute chart simply says, I need to understand which way the direction of the market is going. If it's at the bottom and it crosses over, then I'm going to immediately in my mind say, I'm looking for a buy position. That's rule number 1. The second thing I'm looking for in a buy position is a flat bottom on a green candle. That's rule number 2. And then the third confirmation is that PSAR at the bottom. Once I see that, then that lets me know on the 15-minute candle, I can do a market execution. I set my stop loss and my take profit at 10 pips, and I'm cashing out. And the converse of that is on a sell. If it's at 80, the blue line crosses over the red in a downward position. The next thing I'm saying, that rule says I'm going to take a sell position. The second thing that I'm looking at that point is a red candle with a flat top. And then the third thing that I'm looking for is the PSAR at the top of that red candle. Once I see that, boom, the signal says I can do a market execution. I put my stop loss in and I calculate 10 pips and I can take profit. That's what the 15-minute chart is telling us. The reason why we're sharing with you the higher time frames is for those individuals who want to gather more than 10 pips. And the higher time frame is going to give us the overall trend for that particular currency pair looking to the future. And if I see that it's in a strong uptrend or downtrend, then that gives me the flexibility to stay in that trade longer, that I can gather more pips. That's
Okay,
what we're explaining to you tonight.
Okay,
Does that
got
make
it.
sense?
Got it. That's clear. That's clear. Got it. Thank you.
Exactly. Thank you, Mr. Rogers. And so basically that is exactly, you're able to capture more. So we know that this is in a downward trend. We know this is a strong sell. This is a strong downward trend. So when I come back to the 15-minute chart, what I see is it's prepping for a buy right now. It's preparing for a buy. So my buy that I take is only going to be 10 pips, period. That's it. I'm not taking more than that. But when it turns back around, because if you know, just as we've trained, we can watch the currency pair go down, we watch it come up, we watch it go down, right? So we know that when this goes up, that I'm gonna prep and I'm only looking for 10 pips. But when it comes back down, you can actually capture more because it's in a strong sell. It has a strong sell right now. Now, what we introduced the other night was a 5-minute, being able to scalp on the 5-minute. So if there was a trade caught on a 5-minute, understand that 5 minutes happen a lot more frequently. So if I know and I understand that this is a downtrend, as you see on this hour, this is a downtrend. You notice you don't have as much flexibility in here to capture those pullbacks, those corrections. You see, that's a correction. That's a correction. But look at the downward motion. Look at the downward motion. So it consolidated a little bit, but as it's coming out, look at that downward motion. So you only want to trade with the trend when on that 5-minute chart. You do not want to trade against the trend because this happens a lot more frequently. Each one of these candles is 5 minutes. So there's no cushion there. There's no room there. So with that pullback can put you in a position where you're hitting your stop loss. And that's not what we want to happen. So I don't want to trade against the trend if I'm scalping. Remember, I'm only going for 5 pips. So if I'm only looking for 5 pips on a scalp because I'm on a 5-minute chart, then I'm definitely not going to risk. I'm not going to be looking at a stop loss to grasp more than that. So if I'm on a 5-minute chart and I'm scalping, I want to understand what my hour is doing. I want to trade. I want to scalp with the trend because 15-minute is got room. You can sit there and you watch you see it go up and down until you hit that take profit. And that's fine because you hit your take profit. But on a 5-minute, you're scalping and you don't want to have to set a stop loss. Like if I'm in a downward trend, I don't need a stop loss way up here because that's where you're going to have to set it if you don't hit it right away. So you want to make sure that you can utilize these pullbacks as precise entry points. So we know that it's in an upward trend, it's prepping for an uptrend. These candles are 5 minutes. So just like when it was prepping for this uptrend, we know that it's coming back and you can just hit it, enter when everything lines up. Of course, this one is not where it's supposed to be, and you enter the market and you trade it and you trade down. Any questions, any comments?
So, Ms. Dyer, this is Sharon. So what you're saying is if it's in an overall downtrend and you're on the 5-minute chart, then you only need to trade. You only need to do a sell.
Correct.
Okay.
Any more questions or comments? So we'll just look at another one. This one looked like it consolidated some, but I might go pull another one. Because this one consolidated, it was turning for an uptrend, but it started consolidating. And you see that one's in the up. But you see how what I wanted to show you on this one was, you see how when we get to the 15-minute chart, and like I said, this one definitely started, it kind of got to some consolidation. So let me see if I can find another one.
So go back to that, Ms. I want to go back to something, even though it's in consolidation. I want somebody to walk us through, even in the midst of consolidation. I want somebody to open up their mic and tell us the rules and what we would do and how we would take advantage of no matter what the market is doing. Because I want everybody tonight to understand how to really read the road signs and be able to identify when to enter, to exit, and when is a good trade, no matter what the market is saying. Because I want us to be so sensitive to hearing what the music is telling us that no matter what it's doing, we know how to become profitable, because that's really what our next dimension of trading is really about. So here we are. What time frame are we on right now?
This is the 15-minute chart.
So someone tell me on the 15-minute chart, what do you see? Somebody just open up the mic.
So this is Sharon.
Uh-huh.
And right now I'm looking at the stochastic, and I would not enter this trade based on where the stochastic is right now. I think it's too far down. But then I'm also gonna take a look at the candle. If the stochastic is going in a downward trend, the blue has crossed over the red, then I'm looking for a red candle, and the red candle needs to be flat at the top. And that's rule number 2. And then finally, the PSAR needs to be at the top of the candle as well.
Right. So based on what we see right now in this particular currency pair, we are seeing that it's still in a buy position with the PSAR being at the bottom, and the candle is still formulating, correct? Is that what you see?
Yes.
Right. So we're on the 15-minute time frame, and did it kind of execute what we were talking about earlier? What we're still seeing a trend of a buy for this particular candle. However, overall market structure tells us if we jump to the 1 hour time frame, and if you could jump to the 1 hour time frame, what are we seeing? What do you see?
A strong downtrend.
Now look at it again. What is this stochastic telling you?
Oh, the stochastic. Okay, the stochastic is telling me that it's in an uptrend.
Right.
Hikanashi, and then there's a huge gap.
Yes.
Huge gap right here.
So the overall trend for this particular currency pair, although it's not in alignment at this particular time on the 15-minute chart, I can look at now, because we are getting more acclimated with understanding market structure. I can still safely understand that I can enter into this trade. And now, based on what we're talking about tonight, because I know that it's still in an upward trend, I can enter this, because if you look at this particular currency pair on the hour chart, what is it telling us? What is it saying to you?
This is
Why?
an upward trend.
Oh, this is still in an upwards trend. I mean, it's
Right. So if you're looking at what we're teaching you tonight is then I can now take this trade and understand the overall market structure. And that's really all that we're teaching you tonight. So now you can understand, even when I'm looking at the 15-minute chart or lower time frames, when I understand what the entire market is doing, then I can make a better assessment. And now I understand that I'm trading with the trend and I'm really riding the wave. And that's the whole purpose of getting your eyesight keen tonight, to understand that no matter what the market is doing, when you are listening to what the market is saying, then you're not in conflict with the market. And this is going to help you mitigate the risk of losing your trades, because now you understand the overall market structure.
And then also look at these candles. Yes, we're not trading it because it's consolidated, but look at these candles. So the wicks started to form. These wicks began to form. So what this is telling you, along with the stochastic, because the momentum shifted, so these candles with these wicks, they're telling you that it's shifting. Now, when we first looked at this was a red candle. So when I tell you the market speaks to you, you know, yes, you're looking for those 3 rules. You're looking for those 3 rules that say, yes, stochastic rule 1. Yes, now that once I understand where the stochastic is at, then I begin to identify my candle. Then I begin to identify where is my PSAR. But once you identify that, you still have to begin to listen. And the market tells you, it will tell you. And what this is telling you is, yes, the stochastic is turning, but this is also letting you know that it's going to be some momentum. So even in consolidation, what you see is it was down and it goes up, and then it's going to come down. So that's still going to happen in consolidation. So, but we're not trading it. But as you begin to identify, you know, it's going to tell you, trade me now or don't trade me at all. And so even though this is saying don't trade me, it still has the same formation. It still has the same type of signals that are going on, but I'm not trading this. So, but it's still doing the same. You still look at those candles and they're still doing those same things. They're still telling you the same story. So you wanna always look at that. So let me see. So here we go. Now what is this? This is a strong, nice, strong downtrend on the hour. So we know we got a nice, strong downtrend. Go to the 30-minute, we still got a nice, strong downtrend. So 15-minute, but guess what it's gearing up for? It's gearing up for a buy, right? My 15-minute is gearing up for a buy. I can still, when it gears up, based on where it's at and what it looks like, I can still trade this in an upward trend. I can still trade this for a buy. Why can I do that? Because it has enough room. It has enough cushion for the pullback. It has enough cushion for all of that. Now, and I say based on what it looks like, and that's because that's because it's going to be based on where the PSAR is. Does the PSAR flip? Because we see how strong this downtrend is. We see how strong that is. But when those candles form, you know, right now the stochastic is still running sideways. And why is that stochastic? Now you understand, when you see the stochastic looking like this, why does it look like this? Why does my stochastic look like this? It looks like that because it's going sideways, because I know I still got a strong downtrend in the market. But without knowing I got a strong downtrend, that is why that's why it's so important that the stochastic is flipped in an upward trend before you take a buy. That's why that first rule is so important. That stochastic in an upward trend. The momentum is so important. So that's why that first rule, check. So what you're getting right now is that why behind the what. So the stochastic is the what. But look at this. This candle flattened out some. So it flattened out. You see how they look like inverted steps? See, they always look like steps. But this one kind of hit a stall. It kind of stopped. What is that going to tell me if I go down? It's going to tell me that, I mean, look at this. If I go down and look at these lower time frames, this one is in a strong downtrend, but what happened before this? Because remember, this is a 1 minute chart. This is a 5 minute chart. What happened before? What happens on the lower time frames tell me my pullback. Higher time frames tell me my trend. Lower time frames give me my pullback. That's my correction. See, each time frame has a stochastic. Each time frame has a momentum. Now, on my lower time frame, the momentum's not strong because my downtrend, my overall downtrend of the market is strong. But I can always pop down to a lower time frame, and I can always pop down and I can see that I can see my pullback. See, I had a correction in the market because it has momentum, but it didn't have a strong momentum. It didn't have strong momentum. But so now when I'm on my 15-minute chart, you see, remember how we said it tells me right here when those candles stop protruding longer than the last one, it actually tells me that my trend is halting, that my trend is something going on with my trend. Now we only have about 4 minutes left to the next candle, but it tells me that my trend is coming to an end. That's what it tells me about my trend. However, but I can look to the lower time frame to see what's actually happening with my correction or my pullback to see what's going on. This one just happens to be strong, but I'm quite sure if you see how it goes up and then it comes back down, that's what you see sometimes. And when you see it coming up, you know that that would have been my correction. And then I know it'll be coming back down when it is back in that downward trend. That's your correction. So when the market's doing that correction, because that's what this is just a weak one. When the market's doing those corrections, you see it happening on the lower time frame. I got it in the chat. You notice the PSRs get closer to the candles. When the PSR gets closer to the candles, that means that it's about to flip. Or it should flip. When it gets closer to those candles and it actually touches, it flips. Just like it getting closer to the candles, and when it touches the candles, it flips. Gets closer to the candles, it flips. And that's very consistent. Closer to the candles, and then it flips. That's that momentum. And that's why when we pointed out, I don't know which one we were on, it wasn't this one, obviously. The last currency pair that we were on, the wider that PSR is from the candle, the stronger that trade is, the stronger that trend is in that position, in that buy or sell. The stronger that is. Any questions, any comments? We covered a lot of information tonight. Any questions, any comments? So this is definitely information and things that we're going to be looking for because we'll be trading all of this on Thursday. And I want to ask the questions because I want to make sure. Look at that strength of that candle. I want to make sure.
Ms. Dyer?
Everybody understands. Yes.
This is Sharon. I just want to thank you for tonight's training. It was really good information, and it made a lot of things much more clearer for me anyway.
Oh, thank you. You're welcome. You're very welcome. I'm glad it did. Anybody else? So just to kind of recap, to make sure everybody's on the same sheet of music, to understand completely what it is that we're doing is, first thing first is we talked about the cash out. Okay, the BYOB cash out, it is still the 3 simple rules. Nothing changed from that. Nothing's diverted from that. Nothing has deviated. The cash out is still those 3 simple rules. And what are those 3 simple rules? Those 3 simple rules are, first things first. even though we got to the why behind the what, it's still 3 simple rules. And that is, one is the stochastic. The stochastic, first and foremost, is if it's around the 80, that's the first thing that I'm looking for, is for it to be around the 80. And if it's around that 80, I'm looking for a sell. Around that 20, I'm looking for a buy. That is the first thing I'm looking for. Once that happens, then I'm looking for my rules to line up. If it's around the 80, I'm looking for red Hikanashi candles and a PSAR on top. If it's around the 20, I'm looking for green Hikanashi candles with a PSAR across the bottom. Now, we got to the why behind the what. I look for higher time frames to understand the trend of the market. The trend of the market tells me where I'm going. I don't want to trade against the trend. 15-minute chart can absorb the pullback. But for anything else, I do not want to trade against the trend. And now, I do not want to do that. Now, just to go back, I just want to make sure that when I said these rules, that when I'm talking about the red candles, I'm talking about a red candle with a flat top and a green candle with a flat bottom. PSAR across the top, PSAR across the bottom. Higher time frames, I'm looking for a trend. The higher time frame show me the trend of the market. It shows me the trend of what's happening. The 15-minute chart can absorb the trend based on what it's doing, but these strong time frames, I want to make sure I'm trading with the trend of the market. If I'm scalping below that, anything below that, I want to make sure I'm only trading with the trend. Now, the time frame before is going to show you the market correction. Understand, the market always corrects itself. The market always corrects itself. So you will have, let me come here. The market corrects itself. It's been in a nice strong downtrend. So you see, the market's moving, correction, moving, correction, moving, correction, downtrend. So the market is consistently correcting itself. The 15-minute time frame can absorb that. It can absorb it. So you can trade it up. You can trade it. That's why when we start trading, nothing else is selected. Only the 15-minute chart, period. You want to get into anything else lower than that, if you're doing that 5-minute chart, you only want to trade with the trend. But you can also use lower time frames to understand and actually see the correction that's happening. You can actually see that pullback or correction, whatever terminology that you utilize for it, you can actually see that. So with that being said, do you have any questions, any comments? Now's the time for those questions and for those comments. Any questions, any comments? Okay, so let's see what they called. See if we can analyze some. Okay, so it looks like AUD, JPY, but that's been a while, so we don't have any. Let me see.
This is Sharon. I have a question.
Yes, ma'am.
Regarding the called at price, what am I supposed to do with that? How is that? Why is that significant for me entering a trade?
The called at price is that trigger that when they scan the market, the computer system, when it scanned the market, that's that price that they scanned it at, where they said, okay, here's an entry trigger. But when we do our analysis, see, you have different strategies that you place on top of a currency. So on top of this currency pair. Now, you can look at it as far as, okay, let me click this one. If you notice, 75544. See, we're not blindly taking a trade, right? We're not blindly taking this trade. If we were blindly taking a trade, right? That's that call price. Oh no, I'm too far. I'm 544. That's that call price. So, but we're not blindly taking a trade. But what you can see is the activity that's happened is actually around that call price, right? That's where the activity is actually happening at. So we're in the vicinity of where the computer called it at. We're in the vicinity of where it's at, but it does not have to be spot on. Remember, this is an art, not a science. So we're not gonna be at that specific number. We're doing it as the rules line up. We're doing it as all the indicators form, and I can enter that trade, I can enter the trade safely. I'm not entering the trade at dead on that number, so it's significant to the point that, okay, this is where this price was called. This is where this trade, this is where the computer that does the heavy lifting for me literally scanned the market and said, here is an entry trigger, but I still have to do my personal analysis to determine where I exactly enter it at. And so that's why when I put that line there, you see the activity is still in the area, but I'm not going to enter it until everything lines up for me to do so. Any more questions or comments?
Yeah, on this same currency pair, you're on a 5-minute time frame, correct? Can you jump over to the 15-minute so to see what their rules look like on the strategy?
That was actually called when I did it, so it was called on that one. But,
right, but
so yeah, that one too, because I clicked one on the 5-minute, but it's even still right there, still lining up the same. Because when I clicked it, it was called on the 5. So they pulled it. But
so Miss Escombe, based on that being called and the rules, would you have taken that trade?
This trade right here, no. Wait. Where are we talking? No.
So
tell me why. Tell me why you wouldn't not have taken it. Can you draw a vertical line on that as well?
So I look at the stochastic, and it's still in the downward trend. The blue hasn't crossed over the red in an upwards trend. Number one. Number two, I look at the candle. The candle that I should be seeing should be a green candle, and it should have a flat bottom.
I'm going back. I'm trying to draw the line because I got to look at where it was called at.
Oh, okay. So I'm all the way to the right, up to the end.
No, I'm looking at where it was actually called at.
And also the fact that the PSAR is still, above that red candle, which tells me it's still in a strong downtrend. So I wouldn't take that trade.
So this trade will be on my watch list. And it will be on my watch list because the first thing that you want to do is, you see this is around the 20 and it's actually below the 20. So what that tells me is that it's coming up for a buy soon. So I'm on a 15-minute chart. Now, the candles, the PSAR is actually beginning to close in on the candles. So this trade would actually be on my watch list for a buy. Now, when I look at the hour chart, it's in a downward trend, even though it's closing in on toward the 20, but it's still in that downward trend. So I would not scalp it on the 5-minute at all, because on the 5-minute, it's beginning to turn around, but it's curving at that 20. So I'm not buying this at all on a 5-minute. The only thing I would do on a 5-minute scalp where this was actually called is sell it. So it would have to come back up and I would scalp this for a sale on a 5-minute. But on the 15, following the basic rules of the BYOB cash out, I would definitely prep this for a buy. So this would be on my watch list as I watch the PSAR and the candle get closer and wait for my stochastic to curve up. So it's not actively ready to trade, but it is on the watch list, and it will be almost ready, if not ready, while I'm on a talk with the finance doctor. So with that being said, ladies and gentlemen, it is just about that time. It is time to